Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So I had two great questions that were kind of correlated to each other, so I wanted to answer in this video. And the first question is, why did I select BMO, which used to be Bank of the West, for financing? And he mentioned they have a program for single family homes, which they allow you to adjust your rate down without a full refi and without restarting the amortization schedule. And I'm considering using them as a lender. So to be honest, when I was searching for my apartment complex in Oklahoma, I was referred to a broker, and that broker actually referred me to Bank of the West, which is now BMO, because they purchased them out. And basically, Bank of the West was willing to invest and lend on commercial real estate, so small apartment complexes in Oklahoma, right? So they're kind of like a nationwide lender, and they had pockets and branches in Oklahoma, and they really liked that market. And what I really liked about BMO for apartments in Oklahoma was that they allow amortization over 30 years. Typically, if you're going to like local community banks in Oklahoma or in any area, it's 20 to 30 year amortized. And what I really liked about Bank of the West slash BMO was that they gave you about 7 to 10 year term, right? So after 7 to 10 years, you lock your interest rate for 7 to 10 years, and after that, you're forced to refinance essentially. So I did like that I could get 7 to 10 year fixed debt, so that I could wait for a good time to refinance. If interest rates are high right now, I can wait it out, and hopefully it goes down. I can refinance, right? So I like the 30-year amortization, and I like the competitive interest rates. But keep in mind that typically with BMO and Bank of the West is that they front load the interest of like all loans, but I would say especially more with BMO, right? So like for example, if I'm paying like 92,000 bucks a month, maybe 300 goes to like principal and 1,700 goes to interest, right? So that's how banks make the money, because you only own the loan for like 7 to 10 year term, and you're just mostly paying interest for those 7 to 10 years, and you're gonna do a cash out refinance, pull out some money, hopefully lower your interest rate, and then you can buy another piece of property, right? So that's what you're forced to do with commercial real estate. You're forced to refinance every 7 to 10 years, right? That's what I typically recommend. And typically BMO, their interest rate was very nice because you have relationship discounts. So if you have X amount of money in the account, they'll tell you like if you have like $50,000 in the account, they can drop you by a point. If you have an existing relationship, they'll drop you by a point. If you have automatic payments, they drop you by a point. So I thought their interest rates were very competitive, which is why I chose them, right? So I've only used them. So I have BMO for my 26 unit, and I used BMO to refinance my 20 unit. And I think I maxed out my loans with BMO. They said that like they only lend up to like about 1.5 million, so I'm almost there already. Like if I do a refinance, I'm gonna hit. And another downside of BMO, which is probably more usual of commercial loans, is there's a prepayment penalty that's a percentage and it steps down. So I think it's like 5% year one, 4% year two, 3% year three, 2% year four, 1% year five, and so on. So when you refinance, you're going to pay that fee, right? So no real good reason. They just happened to lend in Oklahoma, and they gave me good terms, and that's it, right? Plain and simple. Nothing else besides that. So I haven't used them for single family homes, so I can't speak to that, right? But I've used them for multifamily. And another question is, so kind of related. Does the lender allow you to switch your properties from your personal name to your LLC? I thought usually they ask you to pay off the loan immediately if you switch to LLCs. So when I bought my single family homes, which were house hacks, I actually bought them under my personal name as a primary residence under my social security number, right? So under me personally. So an advantage of that is you get lower down payment, you have better interest rates, right? However, you're personally guaranteeing this, right? So if I were to then transfer the property from Steven to Blue LLC, I have my attorney help me do that, right? They fill out the transfer deed, you pay a filing fee, and then basically that happens, right? And from my experience, it doesn't trigger the due on sale clause, right? And that's where people get scared, because lenders, all they care is that they're getting paid every month, right? So whether it's Stephen Nguyen paying them every month or Blue LLC paying them every month, they don't care, right? So just some things to take into consideration when you do switch from your name to an LLC. Basically the banks, If they do notice it, they might just say, hey, can you update your insurance to still include your name as well as the LLC, right? And then just know that the loan is still under your name, right? Like, even though the deed is under an LLC, the loan's still under my name, right? Because I don't want to lose my 3% interest rate, right? So the loan is under my name. So I'm still personally guaranteeing it. On insurance, I have my name as well as LLC's name. On the loan, it's my name, and there's no LLC on it, but on the deed there's an LLC, right? So typically they don't call the due on sale clause, but however, what you must make sure is that if you transfer my name to an LLC, and let's just say if I'm 100% owner of the LLC, there's no reassessment of your property tax, right? Because there's no change of ownership. It's going from Steven to Blue LLC, but Steven owns 100% of Blue LLC, right? But if I were to go from Steven to Blue LLC, but Steven owns 50% of Blue LLC and John owns 50% of Blue LLC, at that point it's a change in owner, and at that point they're going to reassess your property tax, which is going to go up to present day value. So this actually happened to me on one of my properties. I transferred it from my name to an LLC, and they sent out a letter, which I guess I missed, but they said, hey, can you please submit proof of your LLC documents, your operating agreement? And what they're looking for is that I'm just 100% owner of this LLC. And if that's the case, they're not going to reassess my property tax. But because I didn't send that documentation timely, because I lost the letter for whatever reason, or it never came to me, they actually reassessed my property tax from I think 800,000 to 1.3. So my insurance, my property tax increased significantly, and I was like, oh my god, what's this huge bill? I'm even more cash flow negative now. But I called the tax assessor's office and said, hey, why was my property tax reassessed? I just transferred it from my name to an LLC that 100%. He's like, oh, I just need documentation and we can reverse it, right? So that may happen if you don't provide the documentation. So from my experience, when you transfer from you to an LLC that you own 100%, it shouldn't trigger property tax reassessment, and it shouldn't trigger a due on sale clause, right? And worst case, you just explain to your lender that, hey, my name's still on the loan. It's just under the LLC for asset protection, which is very common. And basically on insurance, I'm including both my name as well as the LLC, as well as them, so that everything's covered. So at most, you just requires a conversation with your lender. So that's kind of been my experience. So hopefully that kind of answers your question there. But overall, great questions. Discussed about why I chose BMO as my lender and what happens when I switch a product from my personal name to an LLC. So it's kind of related to taxes as well as asset protection. So if you're looking to buy your first multifamily deal with guidance and mentorship, consider the mentorship program down below. Please like, comment, subscribe. And once again, just double check everything I said with your lender, right? I'm speaking from my personal experience, but double check with a lender. Double check with your attorney if they're transferring a property from your personal name to an LLC, and get that confirmation that yes, it won't trigger that due on sale clause. It won't trigger a tax reassessment, right? I'm just trying to make you aware. Anyways, please like, comment, subscribe. Let me know if you have any questions. Hope to see you next one. Thank you.